Do you want more than 25% returns? Let me repeat again, 25% returns. Right, I am just saying it right. Do you want more than 25% returns? For the last 10 plus years, there is a fund which has done that. But how many of you have noticed that? I'm just going to share about that fund in this today's video, right? So before I share, let me say about myself. Hi, hello, this is Ganesh and your millionaire coach and author of the book Money Leaks. I released a latest book called One Page Stock Market Plan. Please check in the description section. And one last thing before we proceed, please click the subscriber button so that you keep continuing videos for your unlimited wealth, right? So let me repeat the today's topic. Do you want more than 25% returns in mutual funds? So that is a topic, and that too easily, right? So it's a ETF category. I'm just saying about Motilal Oswal Nasdaq 100 ETF shares. ETF is nothing but exchange traded fund. You can refer my previous other videos on ETF as index fund. You can trade this ETF similar to shares, like a single share. And what you can do with this fund is that you can keep trading just like stock market. And because this fund is investing in foreign market, yes, Motilal Oswal Nasdaq 100 ETF fund is investing in US market. So that is something like, how many of you want to invest in US stock market? And because we know that Nasdaq index, because that index has been going on like anything. Apart from even this, we can't analyze all the other things, but the top 5 to 10 stocks, the Amazon, Flipkart, not Flipkart, sorry, Amazon, Amazon, Netflix, Facebook, and all these companies, right? Microsoft, Adobe, all these companies had given skyrocketed returns in the last 10 years, 10 plus years, even more than that. Apple, I forgot Apple, right? So all these companies are technology companies, and they have been investing for their future products and services, because of which this stocks has been going on like anything, and they are minting money like anything. So in India, we don't have such kind of companies which keeps growing for the last more than 10, 20 years, and which is so strong. It looks so strong for the people who had invested in this for the last 20 years. They are not just crorepati, they are more than that. So how can we take advantage? That's how this fund, Motilal Oswal fund, has started investing in US markets, and that too very very comfortable way, right? So we are going to give our money to this mutual fund, and they're going to invest in their ETF, because they are going to replicate the Motilal Nasdaq index. So it's quite easy. So what is the expense ratio? Is just 0.5%. So if you're investing 100 rupees, just 0.54 paisa is going as expenses. The remaining entire amount goes into investment. And I just need to say that there is a risk of foreign forex, because Indian rupee needs to get converted into foreign US market, US dollar, and then it will get invested. So the number one positive thing is expense ratio is very less, and you are investing in US index, and US index is a always grows. And passive investing, that is what they are famous for. Vanguard started that, and because of this, US index has always been positive. And if you are afraid of stock market, don't worry. You put in US stock, US index, and that has done extremely well, right? So in this case, if more than Sensex, if you want to make more returns, that is a place, right? So US index. And the third most important point is 99% of the money, as I said already, because expense ratio is very less. But you are investing, though the forex risk is there, that's okay. Forex will come. Forex, if there is a US dollar is increasing, your money invested will come down, and because of which there might be lesser interest will go down. Sometimes volatility will be there, that is the point. But most importantly, over a next 10 years period, US index for sure will go up. Even there are so many recessions in US. If you see, in 2008-9 we had a recession, and the last 10 years we didn't have much bigger recession, but the market has been going up and down, and still US market has always the mood higher. So in that scenario, that's a good investment. And finally, since inception, since 2011, this is the most important thing, this fund has given more than 25% return. So just think of more than 20% itself. uh, how much good is it, right? So you are investing, if you had invested in SIP in this company, in this mutual fund, just think of how your returns would have been in the last 10 years, right? So that is what I just want you to look at. And 25% returns in every 4 years, your money is going to get doubled. So 12 years timeline, automatically your money is going to be like 3 times the money you had invested, even by SIP. Even if you are invested in 1 lakh in this fund, it would have been more than 25% returns on a compounding basis. That's what this fund is all famous for. So just look at let's look at investing. Let's look at all the points immediately one more time, so that one is the expense ratio, which is very less, and another point is the why this fund, it's a US index fund. So you can start investing in US index fund, and also the 99% of the money is getting invested. That is another huge point. And just a minute, I'm just doing a calculation of how much it would have been given. So 1 lakh of money in almost equal to 10 years, your money is worth close to 9.3 lakhs. Just think of, can you get this much returns in any other place, right? That is the point you need to think of. And that is the reason I'm telling, just let's do the analysis of investing per month, right? Per month you are investing 5,000, and for 10 years you are invested 6 lakhs of money, and your total worth would be more than 21.7 lakhs, 21.65 to be precise. So just think of 1 lakh of lump sum investment during the NFO would have been worth more than 9.3 lakhs, and you are not investing anything. But if you are investing per month 5,000 rupees, you would have invested 6 lakhs by this month, this 10 years timeline, and you would have been sitting around 22.65 lakhs. Just think of, we have been trying to invest in child's education policy and all these things, but this is the most easiest way to make money, is right. So just think about this fund. It's not a recommendation, it's a review. Just go and check whether this is the fund you have been looking for a very long time, and that too in a passive way. It's a ETF, exchange traded fund, expense ratio less, and risk is less. So but only for long term, not for short term trade makings. Stay for long term, reap the benefits. That is what this video is all about. Just rewind, and don't forget to click the subscriber button and be my subscriber, right? Thank you so much. Please share this video if you loved it and with your friends.